In today's video, I want to give you a full insight into my six-figure investment portfolio. Now, I've done that 3 months ago, where I've taken you through my 80K portfolio at the time. So now 3 months later, I'm super excited that I finally crossed the six-figure portfolio mark. Now, that does exclude my cash position at the moment, which is quite substantial. Plus, of course, my real estate, which is arguably my biggest asset, which I'm not tracking in the investment tool that I'm showing you to track my overall net worth. But alone, my investments in crypto, ETFs, and stocks now finally crossed the six figures. I'm really happy with this. Obviously, I'm still only getting started. I have a long way to go to hopefully one day cross 7 and maybe 8 figures, who knows. But obviously in this channel, I'm all about transparency, taking you through with me in the process and see how I build up my positions and investments over time. Now, obviously, this is not to boast or anything, but it's just to inspire and show you what is possible with consistent effort in investing into sometimes boring stocks that I invest in without chasing the latest hype stocks or meme stocks or what have you, but just continuous investment into safe asset classes, and hopefully that will be useful for you. So without further ado, let's get started. Now here we are inside my investment portfolio, and as you can see, finally I crossed the 100,000 figure mark, which I'm really happy about. Now obviously this includes continuous investments that I make on a weekly basis. Every week I continue to buy new stocks and invest to grow my dividend income as well. But of course also some nice increases we'll go through in a moment, mostly from Bitcoin, but of course some of my other holdings as well, which is nice to see. Now in case you're wondering which tool I'm using for that, this is called GetQuinn, which is an amazing app that basically consolidates all my various brokers. You can see here I'm tracking my interactive brokers, my Trading 212, Trade Republic, my Nexo, my Ethereum, Polygon, Bitcoin. All these various things are all tracked. Otherwise I would have to log in into each of them, add up all the numbers, and it would be quite cumbersome to actually know how much you're actually worth at the time and own. So here it's really nice to see in one app. So really it's so powerful. I have it as an app also on my phone, so I can check it on the go whenever I'm feeling like I want to see the numbers. And yeah, it just makes things so much easier. And if you want to sign up, use my link in the description below. And if you do so, you can also track my portfolio and see all my holdings there as well. And the nice thing about it, it actually auto syncs. So you can see it's auto synced every single time when I make trades. It comes in right away, which is really cool. And some people say, I don't feel comfortable, auto syncing and linking my portfolio to them. That's totally fine. All you have to do is click on add portfolio. And in case, for example, you want to link your Trading 212 account, you could do either automatic connection, but once again, if you don't feel comfortable doing this, because technically they can access your account, even though it's a read only, so they can't really do anything with it, but I totally respect it. If you don't feel comfortable, even though I do it personally, you could also do a manual import, right? And from here, put it there and then tracks it over there. Right, let's have a look how the portfolio developed. And really when I go year to date, you can see really a very nice number that went up over here. Almost 8,000 euros increase. So as I said, obviously I made some portfolio additions over there, but also some nice increases from my various positions. So I'm overall really happy with that, and that's really good to see. Now, one thing though, right now, obviously you can see it in euros, even though technically I track it myself in dollars. That's why I'm gonna go ahead and change it into dollars, because actually my biggest holdings are dollar dominated. So it would be wrong for me to look at it in euros, because actually in terms of euros, I might also benefit from exchange wins or exchange losses. So even if my stock did really well, which is nice to see, but at the same time my overall portfolio number might be down because the exchange rate is unfavorable. So I don't like to include the exchange rate factor. That's why I take it out and I choose the currency that the majority of my holdings are based. And I always recommend people to do that, because otherwise it kind of changes the results and you don't have a real apple to apple comparison. So in my case, as most of my holdings are in dollars, it just makes sense to look at it in dollars. And the nice side benefit of it, you can see already my portfolio number went even higher, because obviously dollars are a little bit higher than euros. But ultimately, when I look at year to date, for example, you can see now it's only $6,000. So technically, pre-sold was 8,000 euros, right? So in dollars, it should be $10,000 more. But because the exchange rate factor, that's why I really prefer looking at it in the main currency that I buy in. Right, so let's go one by one into my various positions. And I kind of listed those positions very easy by biggest position size. In my case, as you can see right now, it's Bitcoin, and you can add anything here. You can add all your other assets if you wanted to. I could technically track my real estate. Now, obviously, I would have to update it manually, depending on the market price, etc. But overall, you can really put other assets. If you have an expensive watch, you can track it here as well. So in my case, it's only crypto, some ETF, and of course my other stocks, but you could add much more if you wanted to. And then you can choose between intraday or all time, but in this case I want to look at all time how it developed since I bought it. And as you can see, obviously, my biggest position is Bitcoin. Now, I always say I'm a conservative investor, which if you look at the portfolio, doesn't really look conservative because that's quite a risky asset. And honestly, that's not a buying recommendation, right? It just happened to be one of my biggest positions because at the time I got quite excited about it and then bought quite a bit. And obviously, it also developed quite well for me. Even though, unfortunately, as much as I want to take pride in that nice gain of $35,000, sadly, that's not 100% correct, because the only thing is when you track your cryptos, I had it in many different exchanges. When I imported my public wallet address, here they cannot see the buy price because I had different exchanges. So it kind of got diluted. So in this way, it's a little bit missing the buying position. So yeah, obviously my total is correct at $54,000. However, my buy-in is a little bit higher. I believe my average was around $40,000 that I bought it for. So technically I'm up around $8,000, which is still really nice, right? It's definitely my biggest gain of all my various investments. And I'm actually getting excited again of buying more Bitcoin, which I have been doing recently through Nexo. So even there, I'm slowly starting to build up a bigger position, even though majority of my holdings of my Bitcoin is kept in my Ledger hardware wallet to keep it really safe and off the internet, so to say, to take ownership of my own crypto holdings. But I'm starting to build up a bigger position once again into Nexo, which is my favorite crypto exchange of choice. Any future Bitcoin buys, I will add that manually so I can really have a proper cost basis. In my case, I started off early on and then some of the crypto exchanges even disappeared. So it's a little bit hard to go back and track all these numbers. Sadly, I wish I could, but still, overall, I'm really happy with it. I made a huge gain. And obviously, when we can see from the beginning of the year, it also got a lot of momentum. So you can see almost $5,000 up just from the beginning of the year. So that's one of the biggest part of my gains comes from the Bitcoin increase. And Bitcoin is definitely my biggest crypto holding. I do have a bit of, I'll show you in a second, Ethereum and Polygon, but I'm really thinking in the future to even sell those and convert them into Bitcoin. So with this, we move to my second biggest holding, which is the Vanguard S&P 500. So when we look at it, how it developed since the beginning of the year, I mean, really up nicely, 5% once again. And for the 1 year, up 21%. So I always recommend, if you're not sure what stocks to buy, etc., you can never go wrong with the S&P 500. In fact, they just reached a new high above 5,000 for the first time. So it continues to climb over time. And yeah, it's just something you really, as I said, can't go wrong. So if you don't want to do much research, etc., definitely invest into the S&P 500. For that, I buy a Vanguard ETF. There are other ones out there as well, like BlackRock, etc. But I just like the Vanguard one. And I buy the VUSA, as you can see over here. That's the abbreviation. That's probably the most popular one and most traded in Europe. It's a distributing, so they pay me out a dividend, which is nice to see. I do get a dividend from them, even though it's very little, but they do pay that to me, and then I can choose what to do with it. But overall, as you can see over here, I'm up almost $1,500 or 10%. You can see in my past transactions, but yeah, haven't really bought that much in the past because I've been really focusing on building my dividend income by buying individual dividend shares. But yeah, I will definitely do more of it in the future. Once again, you can see here the dividend yield a little bit on the lower side, but overall, I'm really happy with the S&P and I will definitely be buying more of it in the future. The next one is another one of my crypto holdings, which is Ethereum. It often moves in very similar trends as Bitcoin does, but still I understand Bitcoin better and I like that it has a limit of how many Bitcoins I have available. I really understand it versus Ethereum. I see a better use case for it, but I'm not sure I 100% understand everything about it, even though, again, the price gain looks very good. But of course, as I said, similar to Bitcoin, my buy-in was a little bit less, so the gain is around $1,000. But still, again, I'm happy with it, even though I might just take the profit, sell out of it, and convert into Bitcoin. So yeah, I will probably do that sooner than later. But yeah, for now, I'm obviously happy with where it is right now. Then we come to my biggest individual holding, which is Realty Income. Now, Realty Income is my favorite REIT. That's basically one of the biggest, if not the biggest, in the United States real estate investment trust, and they pay me a monthly dividend, which is really nice. Now, sadly, in terms of total return, it doesn't look too rosy, but there's a simple reason to it, because now obviously we're in a situation where the markets around the world, especially the financing, when you borrow money, it gets extremely expensive. So the more expensive it is, the harder it is for such companies and even for investors like us, to take money from the bank and build real estate, or in their case, to grow and build more real estate in the future. So that's why it's been a bit on the downward trend. Now, when you look at Max, obviously it has been trending up nicely. Now, at the same time, for me, as I am a dividend investor, obviously I can benefit from a real nice dividend yield of 5.798%. So that's really attractive. And you can see here, every month I'm being paid now $20. It used to be not so long ago. If I go back just a little bit, March 23, I only got 70 cents, So now that I've been increasing my my position in them, I'm also increasing my monthly dividend. So as I buy more stocks, I'm going to get more dividends from them. So I'm really bullish on them. Yes, probably it will continue to drop a little bit further. I wouldn't be surprised. But as soon as the interest rates keep coming down, I think this will really turn and start increasing. Even if the price stays stable at 6%, I'm almost at a similar return than I would get from the S&P 500, and that would only grow and compound over time. So I'm really happy with those guys. I don't see huge, massive growth, but it's a stable dividend growing company, which has been paying and growing the dividends really over a long, long time. Then we move to the next position, which is Pfizer, and similar to them, unfortunately, they have been a bit on a downward trend. At the same time, I really believe in the long-term prospects. As you can see over here right now, I'm down, $631. And once again, I'm really not too bothered. People think you lost money. I haven't lost money. If I would sell all my shares now, yes, then I would materialize that loss. But since I keep and hold on to them, it's just a paper loss, Psychologically, you might think, why I'm in the red? But that's why I'm a long-term investor. I have time. If it takes another 2-3 years to recover, I have no problems with it. I look at the next 5, 10, 15 years. And honestly, in the meantime, as you can see, I'm getting a really nice dividend, almost 6% dividend from a pharma company, which is huge. Obviously, they're now coming down from a high that they used to be in 2020. We know what happened then, why they benefited so much. They had record revenues. So now they're really having that post-high slump a little bit. But for me, I'm happy to buy up more shares and build a bigger position to in the future benefit from those juicy dividends. Now, in the interest of time, maybe I'm just going to speed up a little bit some of the individual and slightly smaller holdings. You have here BlackRock, which is another of my bigger holdings. Actually, I'm up by 10%, which is nice, or almost $300. So BlackRock is another company that pretty much, people say they own the world. It's a behemoth company. They have some of the biggest ETFs in the world. They have so much private equity. They invest into huge companies. So honestly, once again, I don't think BlackRock is going to disappear tomorrow. It's a solid company. And yeah, I'm happy to continue whenever they fall a little bit in price to build up a bigger position in them to benefit from the dividend yield. It's not the highest. It's around 3% rate, but definitely it's been doing well and I'll continue to buy more of it. And then we come to the third and last of my crypto holdings. Once again, Polygon has been doing quite well. 351 euros. That's actually the actual gain I made from it. Here I had the cost basis because I only bought it on one crypto exchange. So yeah, I'm up with it. So honestly, I might be really just taking those profits and converting those into Bitcoin. I want to be a conservative crypto investor, if there is such a thing, into something that I really understand. I do know that Polygon does have a lot of good use cases. However, obviously, I really want to consolidate my position in Bitcoin. Then we have Google, Alphabet, which has also been doing quite well for me, up 6.7% or $170, but I only have a small position in them. And that's actually the only stock that I have in my portfolio that does not pay me a dividend, which is quite unusual. And that's why sometimes I was thinking about selling them, but at the same time, it's such a good company to have. I think now with AI coming up, they're going to be more efficient, more leaner, and their profits will soar in the future. So I don't really want to sell them, but at the same time, also not really excited to build up a bigger position. And don't forget, if I go back into my VUSA holding over here, the S&P 500, you can go into allocations over here and also see all the top stocks that are part of the S&P 500. And you can see that technically I already own even more Alphabet because Alphabet is 2% of the S&P 500, right? So in that way, I own even more shares in Alphabet. And of course, right now, Apple and Microsoft and all the other big ones are part of it as well. So that's also something to keep in mind. Then we move to Apple. Being an Apple fanboy, of course, I don't only buy their products, but also their shares, which is nice. When you get dividend from Apple, basically Apple pays you rather than you pay them, which is mostly the case. But yeah, I'm still up, even though they have come down quite a bit in recent times due to slowing down sales, etc. But overall, I think they've been doing really well. And yes, they were the most valuable company in the world for quite a while. Recently only overtaken by Microsoft, but now that they focus really, coming up with new product categories with this Pro Vision, you might have seen these images. That's, I think, in the future going to be a huge revenue driver. Right now, it's just too expensive and too niche, but I think it's going to be a whole new product category. And let's not forget, they probably one of the last companies that really hasn't announced much about AI. Usually they wait a little bit, but once they go heavy into AI, I think they can really monetize that and make some great revenues from that. So I'm really bullish on Apple long term. Right now I'm not building up a major position, but definitely I'm in the plus and I'm happy with that. Then we come to the second REIT that I have, Real Estate Investment Trust, which is Vici. And once again, Vici, similar to basically all the REITs that I own, is down, unfortunately. But once again, I buy it for different reasons. I buy it for the long term. I know that they will do well in the future. Basically, they own pretty much most of Las Vegas real estate. And yeah, so you can see also the dividend, 5.5% almost. So that's really nice. And of course, here you see the portfolio where I'm down right now, and similar to Realty Income, just down. And yeah, unfortunately, not the best. If I go back to 2018, it's a different story. Actually, it's been trending upwards, and I do believe they will come back strong once the financing costs and interest rates will come down. Then we come to my highest dividend payer, which is Altria Group. They're basically a smoking company. And yes, while they are down, technically, I almost made the same in dividends from them because yeah, they pay me a really nice dividend every quarter. Now the dividend percentage, you can see over here, it's almost 10%. So that's unbelievable, really, really nice. And yeah, I'm really happy with the dividends I'm getting from them. You can see here, now I get last quarter $42. So yes, while I don't think they're going to be a growth company, which I'm going to be holding for the next 20 years, at least for the next couple of years or so, I will be holding on to them and benefit from a nice passive income in the form of dividends. Then we move to the most valuable company in the world, which is now Microsoft. They've been really doing well, and I never bought much of it. Only honestly a few months ago I started investing into them, and I'm already up. So now I regret I didn't get into them earlier. Yeah, I think they're doing extremely well. I would love to invest much more into OpenAI, for example, ChatGPT, because I think they're doing so well. But now with Microsoft having quite a sizable position in them, I'm already benefiting from all that AI hype. And honestly, the CEO is such a smart guy, probably one of the smartest CEOs out there. And I think Microsoft still has a long way to grow. So they pay a small dividend, but the dividend growth rate is very high. So yeah, I will definitely be buying more of them. I think they're only going to do better in the future. I'm probably way late to the game, but then again, better late than never. And yeah, I will definitely add more position to them. Then we have Morgan Stanley, another investment company that I like and has been doing, rather flatlining for me. They had increased quite a lot, but now in recent months also came down. Once again, in a high interest rate environment, deal making becomes less lucrative and less frequent. That's why it pulled back a little bit when you look at the stock price over here. Overall, yeah, a little bit of a roller coaster. Obviously, if I go back even to 2004, it has been doing well. Plus, of course, the dividend yield is really nice at 3.7%. So I'm happy with that, even though right now I might not add too much to them. All right, guys, let me speed this up a little bit because I still have quite a few positions, so I don't want this video to become too long. Then we move to Pepsi. Obviously, it doesn't need much of an introduction. One of the dividend kings in my portfolio that I have. Very much flatlining, obviously, still slightly in the plus, but yeah, overall, again, not a high growth company, but I think in the long term, they will do well. They pay me a dividend in the process, and I'm happy with that. Then we have Blackstone Group, which used to be one of my biggest gains, still up $481 or 48%. So really nice number over there, even though they have come down a little bit in recent times. But yeah, they pay me a nice dividend as well. And honestly, a company that I'm really bullish on in the long term and definitely will add more in the future. Then Coca-Cola, in many ways, it's very similar to Pepsi actually. And yeah, I will hopefully be able to increase my position there as well. Now up $66. Once again, the dividend is not very exciting, but it's just something to keep your money safe, right? You know that Coca-Cola or Pepsi is not going to disappear. They're going to be here for the next 30, 40, 50 years. I have no doubt about it. But yeah, that's why I'm bullish on them. But that's not going to be a stock that's going to explode or pay you a massive return. I'm just investing in it for the long term to preserve value, increase my value slightly, plus get a dividend in the process. Then we have my third and last real estate investment trust, which is Agree Realty. I look at it as a small brother of Realty Income in a way. It has more growth potential because they have smaller size, but many of the same approaches actually, and they pay me a monthly dividend, which is nice as well. But same story here as pretty much all the REITs. It is currently down, but of course at the same time, being a dividend investor, it's nice to get a dividend income. So even you see red numbers there, you still get paid by them. Then we move to Thermo Fisher, which is a company I'm really bullish on. They produce actually the raw ingredients, so to say, for all the pharma companies, right? So that's a really amazing company, American company, not many people are familiar with, even though I'm still slightly down. I just opened a position very recently, but long term, when you look at it, when I compare Thermo Fisher to the S&P 500 over the last 10 years in terms of total return, it absolutely smoked the S&P by 359 return versus only 229 of the S&P. So honestly, it's such a promising company. The dividend yield right now is very little, only 0.25%, so almost no dividend, but the dividend growth rate over the last 5 years, 15.5%, and the payout ratio, 6.5%. So it's a tiny payout ratio. So they still have so much space to grow that over time. Then I also have Lockheed Martin in there, but again, it's a small position. It's a defense company. So yeah, long term, I don't think they're going to go anywhere. It's a strong company, has a bright future. I also have Texas Instrument, which is benefiting from all that chip shortage hype that's been going on in recent times. So yeah, that's a small position that I have, but I would definitely love to increase that position size going forward. And then yes, ignore the cash balance here. I think that's what's sitting in my Interactive Brokers account waiting to be invested. Then we move to AbbVie, another pharma company that I love to invest more into. It's one of the dividend kings that I hold that has been paying and growing the dividend since over 50 years. So very promising company, but just have a small position in them for now. And lastly, a tiny position in S&P Global. Once again, another dividend king that I hold. And when you look at their performance over the last 10 years versus the S&P 500, once again, absolutely destroys it. More than twice the returns than you would have had with the S&P. So you can see, there are ways to outperform the market, but of course it's hard to pick which stock to choose. So that's why I say you can't go wrong with the S&P 500. But if you're lucky and made the right decisions, you can really benefit from superior returns as well. So yeah, these are all my holdings you can see right there. And then let's have a quick look into my dividends, how they developed over time as well. And you can see a really nice increase over time, year after year. I started off, in 2019 with nothing, 2020 nothing. Then I got more serious into dividends. In 2021, $15. Wow, that's impressive. It pays literally for 2 coffees in Dubai where I am right now. Then again, it grew a little bit more. I started investing more into the S&P 500. And you can see the majority of my income came from my Vusa holding over there. And then in 23, I really got serious about dividends, started building up bigger positions. It went to $553. And now this year already, I'm at 1,346. And as I continue the dollar cost average and buy more dividend paying stocks, that number will only go up. So, this year, I don't know where I'm going to end, definitely over $1,500. So let's see how far I can take it. But for sure, a nice increase year over year. And that will only continue as I grow my portfolio, increase my positions. And then I benefit also from dividend hikes, right? Because the companies that pay me, they don't just pay me a dividend, but also grow the dividend over time. That's really where the compounding magic comes in, not just by getting the dividend, but by having it grow over time in your favor. That's the real magic of dividend growth investing. I'm personally really happy to see how my portfolio has been developing and growing over time. It just shows you the power of investing over time. You start seeing great results from it. And if you want to learn more about what to look for when you buy dividend stocks, check the link in the description below where I made a free dividend investing guide for you that you can download. Next up, check out this video over here. Thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.